Hello, this is Ashton Ekbatani from Remax. Today I have Mr. John Florio, the mortgage specialist, and I was wondering this question that I come very often with repeat client been in market as a homeowner for some time. They're always asking, is there any way we can shorten our mortgage period? Like instead of 30 years, 25 years, can they somehow use some strategy to reduce their amortization period?
Absolutely. Most lending institutions have two amortization periods. One is a 25-year amortization and one is 30. The reason being is that some people, when we shorten the amortization period, are not able to afford that monthly commitment or weekly or bi-weekly commitment. However, we have to understand that if we go to the longer amortization period, more interest is being accrued and a higher cost at the end of the life of the mortgage will be incurred by the client. My recommendation is to look at what you can afford, sit down with your mortgage advisor, mortgage specialist, and look at your debt commitment, your income, and whether you're comfortable with a weekly, bi-weekly, or monthly commitment, and look at your purchasing power as well. This will allow you to make that decision as to whether you're going to go with a 25 or 30-year mortgage, and keeping in mind that 30-year mortgage has more of an interest accrued at the end of the life of the cycle.
Okay.
We can reduce your costs by going from what most people do is a monthly payment, but the most effective and most economical from reducing your cost of interest accrued over the period is your weekly amount or weekly payment, if you will. But again, do not commit to things that may put you under a lot of stress or duress, or whatever we want to call it, because at the end of the day, you want to enjoy your home. You don't want to be burdened with the fact that you're unable to make those commitments, but also take advantage of the other features within your financial institution or lenders. Some of them allow a one lump sum payment of the amount outstanding within the calendar year of your mortgage. Some of them will allow you to double up on a payment. Some of them will allow you to miss a payment. Obviously, if those advantages are there and you notice that the advantage allows you to reduce the amount that's outstanding, that would be a win-win situation, both for you, that the lender's getting their money sooner, but for you that is paying less interest in the overall picture here.
Okay, great. So just to sum it up, the way I understood is if you are eager to pay down your mortgage and finish it in a shorter period of time, one, you can pay weekly instead of monthly, and that would help you to also reduce and pay less interest for the life of your mortgage. And also the second strategy here is if you can pay a lump sum, let's say at the end of each year, do your saving and pay down as fast as you could. And these two strategies, I think that those are the best strategies someone can use.
Absolutely. And you can also increase your payments if you get a raise or you get a promotion and you're paying, let's say, $2,000 a month, but now you can afford $2,300 a month.
Great.
Strongly recommend it. But keep in mind that once you increase your monthly payment, most lenders will not allow you to decrease it should, God forbid, you run into some problems. So keeping that in mind will probably, allow you to pay your mortgage a little faster with less interest accrued.
Excellent. Thank you very much, John Florio. This is again Ashton with Remax. If you have any question, give me a call. You have my number, 647-407-4049. You better memorize it. Have a good day.